Hello everyone, and in this video we are going to cover the Chapter 4A exercises 4.1 through 4.4. On the first exercise, 4.1A on page 134, we need to look at Karen and Katie's health insurance options and to see if they decide to take the cafeteria plan. Karen is married and is a woman with 4 exemptions and her $2,000 biweekly payroll. Katie is a single woman and it has 1 exemption. So please keep that in mind when we start working through the taxable options for them. And they earn a biweekly. So the biweekly employee contribution for healthcare is subject to a cafeteria plan is $100. So what is Karen's taxable income if she decides to decline the cafeteria plan? In this case, it would be $2,000. If she does decide to participate in the taxable income plan and the cafeteria plan, her taxable income, remember, is the $2,000 minus $100 for the cafeteria plan contribution. Now, keep in mind that the cafeteria plan contributions is covered in Chapter 4 on page 115 in your book. Remember, these cafeteria plans come out pre-taxed. So you take your gross wages minus what they decide to participate in to get the taxable income of $1,900. If Katie's decides to decline at the cafeteria plan, her taxable wages also would be $2,000. If she does participate in the cafeteria plan, remember you take their gross wages minus the cafeteria plan of 100, so her taxable income would also be $1,900. Now on exercise 4-2, we need to now take into consideration how much they would pay in the federal tax withholding and along with Medicare and Social Security tax. So what we would do if she decides to decline in the cafeteria plan, you would take the gross wages, then you would look at Appendix C on page 303. Remember, Karen is paid bi-weekly and she's a woman with 4 exemptions. So you would find the chart, Appendix C, bi-weekly, married with 4 exemptions. Her federal income tax would be $124. The Social Security tax is the taxable wage, multiply it by 6.2%. And then you take the taxable wage for Medicare, multiply that by 1.45%. Her net pay after all taxable deductions is $1,723. Now, if Karen does participate in the cafeteria plan, remember we're going to take the $2,000, all right, and then you're going to subtract off the health insurance cafeteria plan $1,900. Then what we would do is that now her taxable income is $1,900. So then you would go to Appendix C on page 303, and you need to find $1,900 with bi-weekly. She has four exemptions, and her taxable income would be $109. Social Security tax, remember, that is the taxable income multiplied by 6.2%. And then the Medicare tax, remember, is the taxable income multiplied by 1.45%. Okay, so as you notice, her net pay does go down, and it's $1,645.65. One thing to keep in mind is that when items do come out pre-tax, as you notice, her federal income tax does go down. So that is one benefit to doing a pre-tax contribution and participating in the health insurance and dental insurance if the employee does need it, because it does reduce how much you do pay into your federal income tax. Now, if we would go to Katie's net pay, we would take the $2,000, okay, if she decides to decline to participate in the cafeteria plan, you would go to Appendix C, okay, and Katie is single, so you would go to page 301, and you would look for one exemption. Okay, so $2,000 she is earning, and she's at one exemption. So her federal income tax would be $280. So it is really important to keep in mind when you are working through the other homework of how often they are getting paid and the number of exemptions that they do complete. And remember, the number of exemptions do come from the W-4 form that they complete. Social Security tax, as you know, is a taxable income multiplied by 6.2%. And then the Medicare tax is the taxable income multiplied by 1.45%. And so Katie's net pay, if she decides to decline in the cafeteria plan, would be $1,567. Now, if Katie does participate in the cafeteria plan, okay, so remember we're going to take $2,000 minus the 100. Okay, so her taxable income is 1,900 is the taxable income. So you would go back to the chart from Appendix C on page 301, and you would find $1,900 with one exemption for Katie. Her federal income tax would be $255. Social Security tax, remember, is the taxable income multiplied by 6.2%, and then the Medicare tax, taxable income multiplied by 1.45%. So Katie's net pay, if she decides to participate in the cafeteria plan, would be $1,499.65. If you do have any questions in regards to information in Appendix C, please send me an email or give me a call. All right, the next exercise is exercise 4-3A. So in this example here, the company has 6 employees who are paid bi-weekly. We need to calculate the net pay from the information provided for the November 15th pay date. We need to assume that all wages, okay, that's very key right there, are subject to Medicare and Social Security tax. All the 401k and Section 125 amounts are pre-tax. Okay, that's an important thing to keep in mind, are pre-tax deductions, and the wages are not subject to state income taxes. So if we start with the first employee, which is Taylor. Okay, Taylor is single with 4 withholdings, gross pay is $1,500. The 401k deductions is $125 per pay period. Remember, that does come out pre-tax. The taxable income then is $1,375. You would go to the federal income tax. Remember, this is in Appendix C. Okay, and since it's single withholdings and they're paid bi-weekly, you would find the taxable income of $1,375. And for single and 4 withholdings, and you'll find this on page 301, federal income tax is $82. Social Security tax, remember, is at 6.2% of taxable income. And then Medicare is 1.45% of taxable income. So Taylor's net pay would be $1,078.25. Okay, so that's why it's important to understand exactly, as you know, is the single and 4 withholdings, because that does determine the federal income tax that they will pay. The next employee is Walburn. He's married, or she's married, with 6 withholdings. Gross pay is $2,225 per pay period. 401k deductions. So the taxable income would be $1,975. Remember, you're going to look in Appendix C since they're paid bi-weekly. And in this case, married and 6 withholdings. That's quite a bit of withholdings. for $1,975. Their taxable income would be $72. Social Security tax and Medicare tax, the net pay would be $1,732.79. Carpenter is single, no withholdings, gross pay is $2,100. The employees participating in Section 125 and the 401k. So the net pay, remember, you're going to take the gross wages minus Section 125 minus the 401k. The taxable income is $1,975. The federal income tax is Appendix C on page 301. Be $309. Social Security tax and Medicare tax. That employee's net pay would be $1,511.09. On night, married, 3 withholdings, gross pay, United Way deduction, and a garnishment for $50. As you notice, remember, these are not pre-tax, so they're going to come out of the gross wages. So gross wages is $1,875. Federal income tax is Appendix C, okay, on page 303. Social Security tax, 6.2%. Medicare is at 1.45%. Remember that these are voluntary deductions. Those come out post-tax. So their net pay would be $1,505.56. Lon is single with 1 withholding, gross pay. We have some pre-tax deductions. So the gross pay minus the Section 125 deduction minus the 401k. The taxable income is $1,078. The federal income tax, remember, we're going to look on Appendix C on page 301. Okay, they're single, 1 withholding would be $106. Social Security tax and Medicare tax, the net pay would be $884.02. On Schmuter, married and 8 withholdings, gross pay and a 401k deduction. So gross pay minus the pre-tax 401k deduction, the taxable income is $2,350. We're going to go to Appendix C on page 303. We're going to look for $2,350. Married with 8 withholdings, the federal income tax is $83. Social Security tax and Medicare tax, remember, 6.2% for Social Security. Medicare is at 1.45. The net pay would be $2,081.49. If you do have any questions in regards to exercise 4-3A, please let me know. Remember to keep in mind it really does matter if they're married or single, along with the withholdings, because that will determine which schedule you'll be using in Appendix C. And also keep in mind that they are paid on a bi-weekly, basis. And that also determines which schedule you use in Appendix C. The last exercise in this video would be exercise 4-4A. All right, and then I also put together here is just a little schedule to kind of see their net pay in a table format to make it a little bit easier. So that is also out there for your viewing. The other exercise, the last one of this lecture, is exercise 4-4A. All right, so we have a list of employees, and some employees have union dues and or garnishments deducted from their pay. We need to calculate their net pay along with including the Illinois income tax of 3.75 of the taxable pay. No employees exceed those limits for FICA. Remember, Social Security does have a limit of $118,500. Medicare has no limit unless you're over $200,000, where you add an extra 0.9%. Okay, and we're going to use the percentage method. Okay, so this method here Okay, let me see if I can get this all